How dollar cost averaging works. The stock market, a land of opportunity, a wellspring of potential wealth, but also a place where emotions can run wild. You see the charts climb, and you are itching to jump in, convinced this is the perfect entry point. But then the market dips, and suddenly that excitement turns to cold sweat. You question your decision, wondering if you just bought at the peak. This is where many new investors get tripped up. Trying to time the market perfectly is a recipe for disaster, leaving you wondering if you just bought at the peak and selling in a panic at the bottom. But fear not, grasshopper, there's a strategy called dollar cost averaging, DCA, that can be your investing bestie. What is dollar cost averaging? Imagine this: instead of putting all your hard-earned money into the market at once, a daunting prospect for many, DCA involves investing a set amount of money at regular intervals, like every month. Think of it like paying yourself first, but instead of your savings account, it goes towards your long-term investment goals. The key here is that you are buying regardless of the current price. Over time, this magical process averages out your cost per share. When the market is high, you buy fewer shares, and when it dips, you snag more shares at a bargain price. It's like getting a sale on your future. Why should you use DCA? Here are a few reasons why DCA can be your investment BFF. Reduces risk. We all know the market is like a roller coaster. DCA helps you avoid the dreaded buying at the peak scenario. By spreading out your purchases over time, you are not putting all your eggs in one volatile basket. Let's say you decide to invest $100 every month into a specific stock or index fund. If the price is high one month, you'll buy fewer shares. But the next month, if the price dips, you'll buy more shares with the same $100. This automatic balancing act helps you achieve a lower average cost per share over the long term. Discipline is key. DCA enforces a set it and forget it mentality. You automate your investing, removing the temptation to make impulsive decisions based on market swings. News outlets love to report on market fluctuations, which can trigger emotional responses in investors. DCA takes the emotional roller coaster out of the equation. You set your investment plan and stick to it, come rain or shine. Calm in the storm. Market volatility can be nerve-wracking, especially for new investors. Watching your portfolio values swing wildly can be enough to make anyone want to cash out and run for the hills. DCA helps you stay focused on the long term. You know that short-term fluctuations are inevitable, and you have committed to riding out the waves. Is DCA right for you? DCA is a fantastic strategy for long-term investors who are comfortable with a buy and hold approach. It's perfect for beginners or those who don't have a lump sum to invest upfront. Let's say you are just starting your investment journey and only have a few $100s to invest each month. DCA allows you to participate in the market and benefit from potential growth over time, even with smaller contributions. However, it's important to consider these additional factors before jumping in. Potential lower returns. Studies have shown that sometimes, a lump sum investment can outperform DCA, especially in rising markets. This is because your money starts working for you sooner. However, with a lump sum approach, you take on the risk of investing a significant amount of money at the wrong time. Patience is a virtue. Building wealth takes time. With DCA, you might not see significant returns overnight. The power of DCA compounds over the long term. The earlier you start investing consistently, Even with smaller amounts, the more time your money has to grow. The takeaway: dollar cost averaging is a solid strategy that can help you build wealth steadily and weather the storms of the market. It removes the stress of timing the market and encourages consistent investing, which is crucial for long-term success. So, ditch the market timing monster and embrace DCA as your investing ally. By implementing this strategy, you can invest with confidence, knowing you are on the path to achieving your financial goals.